Hi guys, thanks for tuning in to another episode of Nuggets News. It's been another huge week in crypto, so much macro news and crypto news to cover. We welcome 500 new subscribers this week. A new wave of people continues to enter crypto, and we've just had our biggest ever month in our premium education with 60 people joining. So this is fantastic to see in and of itself. We've had Cardano being a big winner this week. We're going to talk about a trade and some fundamentals that are starting to align for Cardano. A bit of housekeeping to start off with. We are coming to Melbourne this Wednesday night, so keep an eye on my Facebook, Twitter for details of that event, but I hope to see plenty of you from Melbourne on Wednesday. On this day in crypto history, so it's been a year since the SEC said that dozens of ICOs may be securities, and ETH really copped it hard on the market. 2 years since Brave had their ICO for that basic attention token, a project that we remain pretty bullish on. 3 years since Rootstock raised $1 million to bring about smart contracts on Bitcoin, and they're just starting to get to fruition now. I'm sure we'll see them in the news. In 2014, Dorian Nakamoto denied being Satoshi, and it's now been 10 years since that $800 billion GFC bailout. You guys know the story, and I'm going to talk about some of the best financial crisis docos because I think it's so important that you have your head around these concepts because we may be heading into another downturn. So in our own backyard here, we had some good crypto news, and this Australia announced a national blockchain roadmap, government boosts, a lot of funding. There's so much happening in this space. They've got some grants to help get a lot of people over to consensus this year and fund that trade mission. And obviously very proud as a member of Blockchain Australia that we are partnering up or merging with ADCA so that we become one voice in the community. And keep an eye on all those socials because we've got a lot of big news coming, and this is very exciting to see. Into the Australian housing market, and this was an article on the AFR. For privacy reasons, I can't show you. This is one for premium subscribers only, and I actually am a subscriber. I do believe it's worth getting some of their premium articles on the AFR. But mortgages understated by 40%, and what they're saying is that there was a big flaw in APRA's data in the way that split mortgages. So if you've got half fixed interest, half variable, that actually is counting your average loan size as a lot smaller because it thinks you're two people. So they're saying the average mortgage figures around $276,000, whereas in reality they could be closer to $500,000, and Australians are a lot more indebted than we first thought. So that's something we want to keep an eye on. I'm sure Martin North and I will talk about that in our next housing market update. But building approvals have fallen off a cliff lately. There was a shocking statistic I posted on Facebook that 100% of projects in Western Australia, the ABC reported, have either been delayed or cancelled altogether. Now, a lot of people came back and said it's very common for construction to get delayed a couple of days, so maybe that's why that figure is so high. Nevertheless, it's something we want to keep an eye on because when building approvals drop off a cliff, that means that building starts are going to shrink, less work for tradies, less spending, and this all plays into this perfect storm, as some people are calling it, for Australia to head into a recession. Over to Korea now, and this chip manufacturing is something that we discussed last week as well, and it's now collapsed 25%, or the worst since 2009. And along with other metrics we keep an eye on, it's all coming together, and we see it one by one in different countries that they really are in a slump. Now over to Turkey, where their lira, their local currency, is tumbling, and in turn, if we look at this priced in US dollars, it starts to look like hyperinflation on the chart. So the purchasing power is falling off a cliff and going down. We know what this looks like in Venezuela. We get that hockey stick growth. And again, people that have invested into Bitcoin, into gold, into stable coins, whatever it is, protect your wealth, get it out of the government-run system. And one by one, countries are succumbing to this. Over to France, and this is the 16th week in a row where the yellow vests have taken to the street, no end in sight, and talk about using military force against them if it continues to be a problem. And I think that we are going to see more unrest in a number of countries, and I hate to say it, but if things get really nasty in Australia and we get a recession, people are going to want someone to blame. And at the moment, our government, you'd have to admit, is probably not doing the best job of running the economy, and no one is warning that things could get messy. Everyone's saying, no, it'll be all right. It's fine. It's fine. It's fine. We've been in this little bubble of our own for 30 years now where we're not used to a rainy day. And I think it's going to hit a lot of people by surprise. And so keep an eye out for this sort of stuff to come to spread to further countries. Now, half the world is worried about Italy getting into bed with China. And in Europe, we know that Brexit, the EU, it's all sort of starting to fracture. And countries say, you know what? We don't care about all these trade deals and sanctions. We just want whatever is going to get our economy going. And Italy is one of the countries that we've discussed a number of times. They're buried in debt. The EU is telling them that they need to enforce austerity and all this sort of thing. And they go, you know what? We want to get a deal with China, get our economy going. And just, the US aren't happy about this. The EU aren't happy about this. But the countries say, we don't really care. Over to the US now, and I think I want to cover these sort of stories because it's part of this well-rounded individual having your knowledge about where your food comes from, living a healthy lifestyle, healthy body, healthy mind, all this sort of thing. And in the US, these pesticide residues have been found on 70% of produce, 92% of kale out there for you guys that love your kale. But this sort of thing is, banned in Europe. A lot of the GMOs, the Monsantos of the world and that sort of thing, and yet it's still very commonplace in the US. So different countries have got different standards and they're putting their people before profits. So this is something to keep an eye on as well. Over to Wall Street, and new hedge fund launches tumbled to the lowest level since 2000. Now, this is something to keep an eye on about when is a good time to invest. Just as in crypto, we see a lot of people going out and raising money now that we've had a downturn, versus when everything's going rosy. We covered the story of CEOs leaving Wall Street. People aren't starting new hedge funds. The markets are all extended. So these are just the little hints that we look at these stories to build our thesis, our big picture on where the markets are. US budget deficit hits a new record, $234 billion, as interest on debt soars. Now, we've covered this so many times. World economic markets can't withstand high interest rates because they have to pay so much debt. 22 trillion in debt. If we want to keep raising interest rates, it's just going to put up those payments to just service the interest on the debt, let alone ever pay down the debt. Big W, another canary in the coal mine, massive store closures, and I think there's something like 50 or 60 stores they're talking about closing now. And it's not just the big end of town, it's these little stores that everyone sees when next time they go to Big W to shop and there's a sign saying, hey, we're closing down. That affects consumer confidence. Again, it's just another story, and we seem to be reporting a lot of bad news lately. Now, Fed Chair Powell is a guy that did lose my respect after he came out and started raising interest rates and telling the market that we don't really care. It's important that we raise interest rates. They've been too low for too long. He's done a complete backflip now and said that we're not going to raise interest rates again in 2019. We're probably going to, if anything, lower them. Now, the Fed's dot plot graph where they've targeted interest rates, they told us they're going to 4% in the next 12 months. And then all of a sudden, we've stalled here at 2.5%. And now making excuses, China's weak, Europe's weak, all global economies have slowed substantially, but never acknowledging that they were wrong. And honestly, the Fed does a worse job than, a kindergarten weatherman, the saying is. So the yield curve has inverted for the first time since 2007, and this can be a huge warning sign. It doesn't mean that recession is imminent, but it does wave that flag that things may be slowing down. And when we have a look at the probability of a recession calculated from the yield curve, we're now up as high as 50% by some measures. Now, I did a detailed video about interest rates, yield curves, how this is going to affect cryptocurrency and other investments for our premium members. So if you're interested in that, head to nuggetsnews.com.au. Over to the finance news and documentaries. I absolutely love these, and I did make a point to rewatch this lately, and so many themes playing out are very similar to what we see here in Australia. So Inside Job was one that I recommend you go and watch again. I have done my top 10 finance and economic documentaries if you search for that on YouTube, ones that I recommend everybody watch. But a new one that I really enjoyed was The Spider's Web, Britain's Second Empire. I won't give too much away, but this was an absolutely brilliant watch that I am adding to my list of favourite documentaries. The reason that I bring this up is because we never forget. At the start, I talked about on this day in crypto history, it's been 10 years since that $800 billion bailout. And remember, all the bankers got their bonuses, while millions of people lost their homes, their jobs, and their livelihood. The Wall Street execs walked away with hundreds of billions of dollars of bonuses. And Deutsche Bank, one of the banks that's really suffering lately, still awarding all their bonuses to US bankers who survived firing. And we see the little guy get slapped on the wrist, blamed with the money laundering and whatnot. It's the top end of town. No one goes to jail. Nothing ever changes. And it's countries like Iceland that did jail bankers and let the banks fail that I believe are going to survive best in the next economic downturn. And I hope we do see stricter punishment, harsher punishment in countries like Australia, particularly if our banking system and the property market does continue to expose all this fraud. Okay, so into the crypto news. And there was big news this week that Binance is coming to Australia with their cash service. And a lot of people said, why 5% fees? Why so high? Well, guys, this is a convenience thing. Now, Binance have said that they're going to have 50% off fees for the launch of this, and it is still only in beta. But remember, during the bull run, some people were waiting 2 to 4 weeks to get verified. And if you had the opportunity to go and buy your first $100 worth of Bitcoin and pay a $5 fee, I don't think too many people are going to be fussed. It is a convenience thing. Now, if you're the sort of person that has cheaper on-ramps, you're familiar with that, how to deposit, that's great, guys. But this is just another option to get on and off out of crypto with cash. I think it's great to see, and there's competition. We've had the ability to do this for a number of years, but don't underestimate the power of Binance marketing and really pushing this to the general public once they come to Australia. Binance is also, there's rumors going around that they're going to implement margin trading. Now, there has been 1 or 2 exchanges, I think it's BitMax, that allows you to short BNB token. But think about what Binance do if they turn on margin trading. People can trade bigger positions, they collect more fees, it makes them more money. So it makes sense that they are going to turn on margin trading on alts. Please be careful, guys. Altcoins are so volatile. It's easy enough to lose money in this space if you're just new and learning to trade, let alone doing it on margin on altcoins. Now, speaking of margin trading, you'll notice that Kyber, I have done a detailed tutorial on Kyber if you guys need, but they have added this margin trade button, and this is integrating with a lot of these other decentralized finance projects out there. So you can start to do margin trading from the comfort of your own ledger, Trezor, MetaMask, your own private key, however you want to store it. But this is just so much competition in this space. All these little dApps that are developing. I just absolutely love seeing this. And this week on Twitter, I recommend that you guys do follow Peter Pan here. Olga's now on Twitter, Uniswap, the Dai Burner wallet, CryptoKitties. These are all one click away on Twitter. So Veil is a prediction market built on top of Olga, and you can now click yes or no, and this is integrated with your Ethereum wallet through MetaMask, and you can start to make bets on Twitter with one click. Now, this is really cool. Augur has been a project I've remained bullish on, but it requires a friendly front end. Now we're starting to get these with one clicks on Twitter. I recommend you guys check these out. One click swaps, CryptoKitties, this sort of thing. I just love seeing that. Now, speaking of projects that have made good progress, I did my full fundamental analysis on Cardano. I think you guys really enjoyed that. I did post for members a little while ago that the fundamentals and technicals are starting to align, and that position is now up around 60%. I'll touch on that towards the end. Now, Coinbase did add support for Stellar Lumens. We've spoken about this a little bit. I think that Stellar are differentiating themselves with a lot of partnerships, and I said if I had to own one out of Stellar and Ripple that a lot of people view as competition, then I was more bullish on Stellar. Now, they've got in bed with the opposition here in many ways. If you've been around for a number of years, you'll know that Western Union were really the enemy, and now here they are partnering up for mobile wallet transfers. remittances, a lot of things that XRP was targeting. We saw that there's 6 global banks sign up to issue stablecoins on that IBM Stellar network. So look, well done if you're a Stellar holder. As I said, I think they are probably doing more in this space. Who knows, Ripple can come out and surprise us with a big partnership any day now. But yeah, well done to XLM. Into the STO news here, and funding platform Series 1 partners with Polymath, and it's all these different platforms, guys. These STO platforms are very exciting. I am looking at a couple that I did share with our members to invest in, because there's different levels. It's the raising of funds, the issuing of tokens, the trading of tokens, the custody. There's so many different areas to look at, and it's the picks and shovels that I'm looking to invest in rather than the STOs themselves just yet. And I have invested in 1 or 2 so far, and I'm looking to add a couple more to my portfolio going forward. And there's going to be some big news and some big partnerships in this space. I can't say too much more just yet, but definitely watch this space. Into the exchange tokens here, and the report saying Binance is up over 120%. I think it's done far more than this, but something that we did share was the fact that all these other exchanges are going to get FOMO and want to do these IEOs, these initial exchange offerings where people have to buy their own native token. It's a new way to do an ICO. And since we posted this alone, these coins are up 50 to 100%. You know, Horbit token, KuCoin shares, Buybox, and Bitmax. So look, it's fantastic to know, guys, that there's these little bits of news, and if you understand them, you do your little bit of research, you understand your fundamentals, you can get in front of that wave just by staying a week or two ahead of the herd, and there's huge returns to be had. This is why I love crypto, because this just isn't really possible in the stock market for me to have that much more insight compared to other analysts on the stock market world, for example, where you can get these sort of returns in a week or two. So really excited to see. Well done to anyone that took these trades and making money. Real world usage of Ethereum gas reaches all-time high, and this is something that shows us that the fundamentals and the crypto bear market doesn't always align. So Ethereum is the gas for the network. It's reached record levels. We did a detailed breakdown about why this is important, and Ethereum is launching a new chain. So many people are not aware of the 1.x chain and the 2.0 beacon chain that are watching. Please check out the Future of Ethereum video that I did this week. Now, we saw Jack come out and hire some crypto engineers, and he wants to pay them in Bitcoin to work on Bitcoin. So a bit of a libertarian move. Look, Jack is someone that a lot of people don't like because they believe Twitter is censoring different, left wing, a lot of the time, parties and whatnot. So I try to avoid politics too much, but I think the fact that we've just seen wealthy people acknowledge how exciting Bitcoin is and pay them to develop on Bitcoin, whether or not this means that Twitter is going to integrate Bitcoin and Lightning payments, I definitely think something like that is coming. But let me know what you guys think of Twitter. I think it's a really important place to source your information from in the crypto world. Lightning Labs released their alpha version of Lightning Loop, and this is an off-ramp solution, as they're saying. And one of the problems that people spoke about for the Lightning Network is these time lock contracts mean that if I'm paying someone, I can't withdraw. It's sort of, the funds are locked in there, and it's fantastic to see the community come up with solutions to these real world problems. So being able to do this as a loop where you use actual on-chain Bitcoin to withdraw, so you can get your Bitcoin instead of it being locked in that Lightning channel. I'll talk about this a little bit more and give you a full rundown of how this works technically, but it's good to know that this is possible to do, and people are continuing to innovate and solve those problems with Lightning Network. Now, we see a lot of different price predictions from different individuals, but this is one that I wanted to mention because Arthur Hayes did come out and say that Ethereum was a double-digit shitcoin when it was, a few $100s. So he has been known to make accurate predictions in the past. We saw ETH drop to $80 after he made that statement, but this is really bullish of him for someone who, as I said, it's been correct in the past. To say that he thinks $10,000 is back on the cards in 2019, I'm not sure if I'm even this bullish. I'm thinking that we're going to have a slow, sustainable grind higher, which is going to be great for traders, great for fundamental investors, and it's not going to be a bubble like last time. So BACTA has been delayed due to CFTC concerns over its planned custody solution. So what they're using is like a one-day sort of futures contract that's settled every day, and CFTC are still concerned about how that is exactly going to work. So the ETF's been pushed back on. We now wait to see how much pushback Fidelity is going to get, but just the next day we saw that CFTC stated that they're working diligently with all the crypto-related applications, including BAC's proposal. So, look, I'm not sure if we watch what they say or what they do, but at the moment it looks like we're not going to be getting backed anytime soon. Fingers crossed for Fidelity, for those of you that are wanting Wall Street to join the game. You guys know my thoughts on it. I'm way more bullish on developing countries adopting crypto. Now, this is a story that I wanted to bring to your attention because there's been a lot of misinformation out there, and I recommend that anyone who wants to read more about this, Google the Tulip Trust and the rumors that there's a million Bitcoins that Craig Wright is claiming that he is the owner of. Jeff Garsick has now been subpoenaed. The ATO is involved here. I'm not sure what to make of this. I don't think that Craig is going to get his hands on a million Bitcoins. Whether or not these were Dave Kleiman's, if the private keys are still even in existence, or the private keys to those million coins were destroyed, I think the overwhelming evidence is that Satoshi wasn't a lawyer, and Craig has clearly stated he's a lawyer a number of times. Either way, this is something that we want to keep an eye on because this can be the cause of a lot of FUD in the future. If the headlines come out and state that Craig has got his hands on these coins and he starts to threaten that he's going to dump them and so on, it's something that you need to be aware of. I've already touched on that story of Arthur Hayes. And before we get into the price, I just want to share that, as I touched on before, on February 15th, these are the sort of posts that we do in our premium group where we outline CoinWatch, what we think in the next month or so is going to have some good fundamental drivers. Now, Maker's been a huge performer for us. Neo's up even 20 or 30%, but it's Cardano that has been super impressive lately. And if we look at from the time that was posted to now, that's up over 60%. It's got its 200-day moving average. If it can come back and use this as support into the moving averages, I think that'll be a great entry for a lot of you guys. And if we look at it from a longest term standpoint, we're only just getting started. We can easily run to 7 cents, and then if we want to really zoom out, we know that $1.40 is that ultimate high. This is that bottoming pattern, that accumulation phase. We've seen an increase in volume, so everything is looking pretty good if you're a Cardano holder. Now, let's head over and look at Bitcoin. And there's a few things that we've been keeping an eye on. So firstly, this Adam and Eve pattern is still valid. It's still in play, particularly when we look at it on the weekly chart. And there's not a lot of people that are talking about this even still, and that makes me more bullish. But if we look at this weekly, we've basically had 7 weeks now of just continuing higher. Now it's into its weekly moving averages. These are going to act as resistance, and it's into this key level here, right around 4,100. That is likely going to act as some sort of resistance. And when we've had such a good run, I'm really starting to think we need to have a pullback. Now, having said that, I'll just take that off auto again, guys. Last week, I posted that I thought we were going to have a bit of a downturn into the 23rd of March. And we continued higher. So this is a great example of a right-hand translation where we go up for the majority of the lengths of this bracket, and all we've got was this little pullback here. So if we can start this next leg higher with this cycle bracket pushing up, we can get through this level. That's really positive. And then I think, we're looking at the 4,500 zone, 200-day moving average, that sort of thing coming into play, and we can finally break through that level. Now, the only real concern here is that volume has been trending lower, and I did a deep dive into, bear flags, wedges, all that sort of thing, and it is starting to look like that now. So this inverse head and shoulders pattern on the daily, it's very close to breaking down. And if we lose these levels, these EMAs, and we lose this high early on in this cycle bracket, that weakness is going to likely continue out to the 9th of April. So look, at the moment, Bitcoin, Litecoin, they're all pretty much following Bitcoin's lead here. Litecoin continues to just ride these moving averages without any huge moves higher. Again, even if we look at this weekly chart, we have to acknowledge how good of a run it's had, but the fact that we are running out of steam in the volume there. The bulls are running out of momentum, and that's when we need to start to be a bit cautious. So I am, I guess, cautious and expecting some sort of pullback, guys. Now, if you do want to join us and stay ahead of the market, we've been pumping out the content in our premium area: trading education, investing education, fundamentals, options education, as well as having this community where you can ask any question and learn together. As I said, we've just had our biggest ever month in our premium education group. So head to nuggetsnews.com.au if you do want to join us. Otherwise, smack that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.